This saga covers the one thing the markets, the Fed, and the entire economy are watching right now: inflation. June's data just came in, and it may have reversed course. After months of improvement, inflation might be climbing again. If that trend continues, it changes everything, from interest rates to asset prices to election year strategies. In this series, we'll break down why the June numbers matter so much, what the Fed is likely to do next, how the market could react, and how traders and investors should prepare. You'll hear how the Fed thinks behind the scenes, how the bond market is signaling fear, and why this month could reshape policy into the fall. If inflation really is accelerating again, this isn't a delay, it's a warning. Start with episode 1 to understand what the June data is actually telling us, and what the Fed can't afford to ignore. Click the link in the description or the next video to begin. June's inflation report just came in, and the numbers may not be as stable as the headlines suggest. While the core rate held steady on the surface, several key categories are heating back up. Energy prices ticked higher, shelter costs remain sticky, and services inflation is refusing to roll over. That's a problem. The Fed had hoped inflation would continue its steady decline, giving them room to pause or even begin cutting rates later this year. But this report raises serious doubts about that timeline. The data suggests inflation may be re-accelerating beneath the surface, and that changes the entire equation. Markets had been pricing in a more dovish path. Now, investors are suddenly reconsidering whether more hikes, or at least an extended pause, are back on the table. In episode 2, we break down which sectors are driving the spike and why the Fed is especially concerned. Click the description or next video to continue. June's inflation spike wasn't random. It came from key sectors. Energy led the surge, with gas prices rising after months of decline. That alone puts upward pressure on headline inflation. But the Fed watches more than just energy. The real concern? Services inflation, especially in housing, transportation, and healthcare. Shelter costs remain elevated, and rent increases are proving far more persistent than models predicted. Meanwhile, auto insurance and repair costs jumped again, showing no signs of easing. These categories are considered sticky inflation. They don't reverse quickly. That's what keeps the Fed on alert. If these price trends continue, it signals deeper structural inflation, not just short-term noise. The June report doesn't just raise a red flag, it raises the stakes. These sectors won't cool without tighter policy. Episode 3 reveals the Fed's next move. Tap next to continue. If the Fed keeps rates high into fall, traders must adapt now. Tighter conditions slow lending and hit rate-sensitive sectors like real estate, tech, and consumer credit. Capital tends to rotate into defensive plays, utilities, healthcare, and consumer staples. Cash and short-duration bonds become more attractive, while growth stocks face pressure. Expect rising volatility as markets reprice expectations. If inflation continues rising, risk assets could retreat sharply. But if inflation cools again without a Fed pivot, sideways movement becomes the default. This isn't the time to guess. It's time to manage risk and prepare for all outcomes. In the final episode, we tie it all together: inflation, Fed policy, and what it means heading into year-end. Tap next or check the description to finish the saga. The Fed is watching June's inflation data closely. Publicly, they remain cautious, but privately, concern is growing that the slowdown has stalled. Some Fed officials are now signaling that a rate cut in the near term is off the table. Behind closed doors, the conversation isn't about easing. It's about whether more tightening might be necessary. Even if they don't raise rates again, the Fed may hold rates higher for longer, reinforcing a more aggressive stance to keep expectations in check. This isn't just about inflation. It's about credibility. If the Fed eases too soon and inflation returns, they lose the narrative. If they hold too long, they risk tipping the economy into contraction. Markets are starting to price in a longer pause, and bond yields are reacting accordingly. Fed staying hawkish this fall? Episode 4 shows how to position. Tap next or check the description. June's inflation data made one thing clear: the fight's not over. After steady progress, prices are pushing back. For the Fed, this shifts the entire game. Cutting rates risks undoing progress. Staying put fuels uncertainty. This saga revealed the core tension: market hopes versus policy discipline. The Fed is defending credibility. Every move now has political, financial, and global stakes. For investors, one rule stands out: flexibility beats prediction. Conditions can turn fast. A soft landing is still in play, but so is a longer storm, tightening cycle. Use this moment to reassess your exposure, build CAC buffers, and tighten risk controls. Inflation is no longer fading quietly. It's back in the headlines and back on the Fed's radar. This saga ends, but the story continues. Check the channel for the next series on GDP revisions, labor trends, and how markets are bracing for Q4 policy shifts.